If you regularly watch this channel, you should be aware that I love investing in real estate, and real estate is an asset class that I will probably continue to invest in for the rest of my life and also keep learning about the asset. Unfortunately, we can't put all our money in one basket and just assume that everything will continue to go well all the time. So it's very important to diversify in different asset classes. In this video, I'm going to explain to you guys why I choose to also invest in stocks and why you should probably consider doing the same. Just a quick disclaimer, investing in stocks is like buying a share in an actual company. It's not this magical thing that can just produce insane returns without you having to do any of the work. And at the end of the day, it really takes a lot of experience, a lot of time, a lot of work, and the right knowledge to identify great companies to buy so that you can eventually receive a good return. At the end of the day, nothing worthwhile is easy, so you need to make sure that you are committed to figure out how it works and why you actually choose to invest in stocks. With that said, I love investing in stocks, and it's something that I'm really passionate about, although it's not as popular to talk about on YouTube, for example, and overall the videos that I make regarding stocks doesn't really perform very well. I can't really explain all the smaller and important details in a video like this because obviously it is not as exciting. With that said, I wanted to touch on this topic again and explain why it's important to diversify your assets and make sure that you buy in different asset classes instead of putting all of your money in one basket. When it comes to investing, you can get much better returns from certain investments compared to real estate or basically any other business. When we have a look at the different type of investments, we get individual stocks, which is an individual company that you as the investor will buy shares in, or you can invest in something like an exchange traded fund, which tracks an index. Simply put, that's a basket of shares where you buy fractional shares of different companies within one share. I hope that makes sense. So example is the JSE Top 40, which is the 40 biggest companies on the Johannesburg Stock Exchange, or something like the S&P 500, which is the 500 biggest companies in the US. These are all great options, and you've probably heard about the S&P 500 on the internet before. If you haven't, please let me know and I can share a link that you can watch to figure out how it actually works. I prefer investing in ETFs or these basket funds as well as individual stocks. At the end of the day, I can show you some of the returns that I received from the basket funds compared to some of the returns that I've received with individual stocks. There's just one big difference. The research that needs to go into buying these companies is on a different level. When you invest in the S&P 500 or the top 40 or whatever fund it might be, generally you don't have to worry too much about each and every company's financial position. You kind of just buy the whole basket and hope that some of them will go up in value. When it comes to individual stocks, there's a lot more work involved, and this takes experience and is really hard work, to be honest. But at the end of the day, the returns that you can receive from an individual stock can be much higher compared to the S&P 500 or the JSE Top 40. I can show you guys an example on my phone quickly. This is just the Easy Equities app, and I'll click on the Satrix S&P 500 fund, and we can see that at the moment the fund is up around 20% or a 19.75% return, which is obviously really good compared to the money that you save in a bank. And this is something that I always tell people that ask, like, where can I park my money if I have too much money and I don't want to keep them in a bank account? This is basically the best or the easiest way to invest. In my opinion, it's not necessarily the best way for everyone, but it's an easy and safe way to park your money and to make sure that over at least a period of 1 year, you should have received a pretty decent return. What I wanted to show you is if I scroll to my individual shares, I can show you guys one or two of the companies that I own, and one of them is Nvidia, which is one of my favorite stocks at the moment, and you've probably heard about it in the news as well. So this stock has currently produced a 241% return on investment. So comparing that to a 20% return on investment, obviously I would like to get the 241% return on investment, but at the end of the day, there's a different type of risk involved when buying individual stocks like this. I have the time and the necessary experience to comfortably invest my money in companies like Nvidia, knowing that I am willing to wait until they can produce a decent return for me. So I would much rather go with a higher return, although there's a higher risk involved, compared to a lower return and a lower risk. This is more focused on someone that wants to gradually get into the market compared to what I am doing, and I like to make aggressive investments because I'm still young and because I just really like doing it. With that said, another example can be like Visa. At the moment it's up 43% compared to a 20% return on investment from the funds. It's basically double. So that's basically the main reason why I would consider investing in stocks, and why I like telling people to consider investing in different assets and not just focus on one asset type. With that said, please let me know if you want to learn more about investing in general when it comes to individual shares or ETFs. Overall, the channel is mainly focused on property at the moment, but I really do like to talk about investments. But at the end of the day, not everyone really likes talking about it. So let me know what you guys think.